Welcome to Balance Your Books, the podcast where accounting meets real world business with a little Gen X flair. We're your hosts, Kina,
April,
and Kimberly of Your Balance Partners. We believe your numbers tell a story, and we're here to help you understand it. We help entrepreneurs make strong financial decisions and build profitable businesses without the confusing accounting jargon.
join us as we break down the numbers, share real world insights, and help you gain the cash flow confidence you need to grow your business and protect your dreams.
Welcome to Balance Your Books podcast. Welcome to another episode. We're so glad you all have joined us. Hello, Kimberly.
Hi, Kina.
How are you today?
I'm awesome. How are you?
Not bad, not bad. It's kind of cloudy outside, but we're pushing through. So, to start off, what do we always ask people to do in case they missed it in the intro?
Okay, so I'm not asking, I'm telling. Make
The
sure
power
you
of
like.
suggestion.
Yeah, the power of suggestion. We are all going to like the episode. We're going to subscribe if you haven't already, which I suspect you do because it popped up. You're going to share it with your friends and family. You're going to comment. You're going to review. You're going to give us 5 stars. 5 stars. All of that and then some.
All right. Thank you so much for telling folks what to do. So, today we are bringing back one of our special guests, Anika Bowles, and she is going to share some more information that we know our viewers and listeners need when it comes to people management around their small business. So, no further what they call it, no further ado. What
With
do they
no
always
further
say?
ado, with no further
Without
ado,
further ado,
With
yeah.
no further ado,
without further ado.
without further
Okay.
ado.
Yeah.
That's what it is.
Mhm.
All right.
Even though
Anika,
we are, but
hello.
without further ado. Hi guys. How are you?
Welcome back, Anika.
Thank you. I love it here. Love it, love it, love it. Excited to
So,
tell business owners what they need to do around their people. Suggestions.
that's
Strong
right. And so, Anika, before we get into the topic of today, which is a really
Yes.
important one, and one we had initially talked about last year in one of our early podcasts, because that we knew that was one of the main topics that people mess up. And so we
Mhm.
want to get your expertise around it. But before that, in case folks didn't look at the other podcasts that you're on, that after this one, I'm sure they're going to go back to that one. But
Right.
tell everybody a little bit about yourself.
Okay. I'm Anika Bowles, founder of Anika Bowles Consulting, based here in Atlanta. For more than 25 years, I've worked with the organizations and leaders in HR, organizational development, and a lot of coaching to help them build stronger businesses or stronger businesses through their people, their strategies, people operations, and relationships. And the thing that I found that I'm best at is helping people build environments where they can thrive and in turn build others. So I think in a nutshell, that is what my superpower is. I think when leaders make intentional decisions about their people being important, they create healthier cultures, stronger work teams, and their businesses as a result more sustainable. And we're going to talk about one of the things that keeps them sustainable today, which is super important, around financial, not just financial but foundational decisions, knowing when to hire an employee versus bringing in a 1099 contractor. And we'll delve into what the differences are, and we will certainly talk about the pitfalls of not doing it properly, because we are all well versed in those areas. So I'm excited to be here. I hope after this podcast you'll have some practical insights that you can apply right away. And I think, I'm excited about the topic.
That's awesome. So, as you all can see, that we brought the right person in to talk about this topic. And so it is around W-2s and 1099s. And so we've heard those terms. Those of you who are out there, business owners, I know you know the terms. We're going to talk a little bit about what they really mean, and then what kind of things that you need to consider when you're talking about people. And so our previous podcast with Anika got into, are you people ready? So this one says, okay, if you're people ready, what kind of people? You
Right.
know, you can't be around everybody. Can't have all kind
Right.
of folks. What kind
Right.
of people should you have?
Right.
And so let's start with W-2. And
Okay.
what does W-2 mean?
Okay.
Yes.
So W-2 is like a little HR and finance slang, right? The W-2, most easiest way for you to remember is that is the form that you get at the end of the year when you have been the employee of a company. They have accepted the financial responsibility of reporting the income they've paid you to the state and federal employment agencies, and they send you a document that should um, sort of map out and record every dollar that they've paid you. And so we call employees of a company W-2s because that's the document they get at the end of the year as an employee.
Right. And so what are those things that make someone a W-2? So, they're an employee, but
Yeah,
there are rules around who can be an employee.
absolutely.
Mm-hmm.
And one thing I want to make clear as we're talking about this is that a lot of one of the mistakes that business owners have made and continue to make is thinking that they get to decide whether or not a person is in a certain role is a W-2 or a 1099, and it doesn't work that way. It really depends on the role and how that person is going to function in your organization. Just because the two of you agree, oh, I'm going to be an employee or I need to be an employee because of XYZ, that doesn't necessarily mean that they are classified properly. And we will talk later about the risks of misclassification because there are many. But when you decide to bring in an employee, and one of the things I talked about in the previous podcast is clarity before building capacity. You really want to
Mm-hmm.
make sure that you have the work and the financial standing and the forecast and schedule of cash flow to afford an employee. Okay, let me say that again. You need to make sure that you have the work and the financial foundation to support hiring an employee. You having struggles in your cash flow does not diminish your responsibility or eliminate your responsibility from paying an employee in a timely fashion and properly reporting the taxes, etc., to state and federal agencies. You have that responsibility. That's the first thing when you're deciding. I want to build out a framework for bringing an employee. You need to make sure you can support them financially. But bringing someone, an employee, go ahead, Kimberly.
No, I was going to say, I think it's key what you said, because you said it doesn't absolve you from paying that employee. You said reporting the tax liability, but also paying it.
Yes,
So I kind of want to make sure that business owners understand that for a W-2 employee, there's more than just the salary.
absolutely. Absolutely. And so let's break that down. Let's talk about that, right? If you're bringing somebody in, you are paying their salary. And I've worked with YBP, so I know that when they do forecasting for employees, Kina has said that they estimate, if you decide you want to pay somebody $65,000 a year as required by the skill set and level of experience that you're looking for, not just I want to pay them this. It needs to be a fair wage in the market that they're going to be working in for their level of experience and for their educational background, etc. You should budget to 120%, right? So their salary times 20 and add an additional 20%
Mm-hmm.
for taxes, for unemployment insurance, for Social Security, all of those things that they will need to be as part of their total compensation. In addition to that, if you're looking to pay for benefits or share in the cost of benefits, and there are some employers that because of the number of employees they have, you have to offer benefits and you also have to share in the expense depending on the group rate that you have the ability to take advantage of. you should probably estimate one, I would say 25 to 30%, depending on how rich that package is. So there are plenty of benefits to bringing in employees, but there also are costs associated, and you need to make sure you have that ironed out and forecasted before you even hire people, because even the hiring process costs money. And so when you're making
And
that
Anika,
decision,
so before you go to that decision part,
yes,
I want to reiterate one thing you said early on, and that was you and that person can't just decide how you want that to be classified.
no.
There are a lot of people who will come and say, well, I only want to work as a 1099,
Hmm.
or I
Mhm.
only want to work as a W-2. And business owners who do not have this information erroneously go into that thinking, oh, okay, if you want to get paid like that, then go ahead. Okay, that's how we'll set you up.
Hmm. Hmm.
Mhm.
And they think that they can just do that.
Yes,
And that's not the case.
that is
It
not
and
the
so
case.
to repeat the whole thing around the decision and
Yes.
like what are those things that from an employee and the work. Talk a
Hmm.
little bit more about that.
Okay. So if you're the difference is for a W two is going to work in your business. They're going to come in and perform functions that are necessary for the day to day operation of your business. And there are parameters around how you can structure or will be able to structure their role. You will be able to, and employers are attracted to the employee decision because a lot of times in the absence of leadership there is control, the desire to control. And so you want to be able to tell the person what the work is, when they need to be there. If you have you want them to wear company paraphernalia, meet clients in the office, you want them to be there a certain number of hours per day to manage customers or be a part of project meetings, team meetings, events, what have you, as it relates to that role. That is an employee. If you are dictating their schedule, if you're dictating the work, that's an employee. And you need to really look at that, look at that again, clarity before capacity. Is this somebody that I need on a day to day basis? Is there enough work for them to do? Am I going to be able to provide the tools and the software and the licensing and all of the things that they need? Do I have the not just the parameters of the job, but do I have measures of success in place so that when they come in to do the job that I'm asking them to do, I can say to them, you're doing a great job. I can give them feedback, and timely feedback is key because a lot of, I want to say a lot, but many, it doesn't matter the size of business. Feedback is a difficult conversation for many
Mhm.
a leader, right? And so, when you're talking about an employee, you need, if you're having struggles or you're the difference of opinion in terms of how that performance should be progressing, you need to document that as part of the employee experience, but you also need to share that feedback with the employee because they need to
Mhm.
have the ability to correct that their performance and show that you are working together to make sure that they are successful in their role. So let's recap. An employee is someone that works in your business. You decide when they are going to work, and there's some flexibility in having an employee that you may not need them full time, right? You may not, so maybe you can have they can work a part-time schedule. So when they work, how they're going to work, how are they going to interact with your customers, how are they going to interact with the rest of the team or even different vendors, how are they working, what tools are they using, are they able to work remotely? That is a decision that you are able to decide for an employee, very rarely a contractor. You cannot tell
And
a
so
contractor where they have to work.
right. And
Yes,
so
ma'am.
with the W2, they can be part-time,
Yes.
hourly,
Yes.
salaried.
Yes.
They can be
Mhm.
any one of those
Seasonal.
in terms of how they're paid. They could be paid monthly, bi-weekly, weekly. That also can be
Yes.
for a W-2, right? You can decide
Absolutely.
that. I think the thing that people miss is that all these other things, like making sure that you are properly trained to lead people and provide the proper feedback, that you have the right documentation and
Yes.
employee handbook, things of that nature.
Yes.
Those are the things that folks like Anika make
Yes.
sure that you have in place.
Yes.
And those things aren't just nice to haves.
Yes.
Those are
Mhm.
the things that you have in place to protect your company
Yep.
from legal mess
Yeah.
when you have employees.
Yes.
Correct?
Yes. Yes. Absolutely. And let me say the thing about the handbook. I have seen a number of business owners who feel like the handbook is a great substitution for them not having to have valuable and feedback based conversations with their employees. And it really is not. You're not required to have a handbook. Okay, let me say that you are not required to have a handbook. It is nice to have, and the reason it's nice to have is because it sets a structure in play. It has it's a structure, right? This is the way that
Because
we
it
work.
has the rules,
It
like
has the
when we
rules.
have vacation,
Yes.
or these are the holidays, or
Yes.
things like
Yeah.
that, right?
So it's great framework to rely on and make sure that as you're building out, as your organization grows, you can review it and make sure that it still works. You can rely on it and make sure that everybody reads it and we all agree to the rules that have been set forth. But it is not a substitute for conversations about individual performance. It is not a substitute for transparency when things in the business change and you need to make
Mhm.
changes, with regard to your teams. And let me say this consistency in itself, right? If you're having consistent conversations, that is a framework. Consistent conversations that you're I want to say, I don't like the word fair because fair gets into these what you did for this person is the same thing you do for somebody else. If you consistently handle things on a case by case basis, that that's a framework, right? So what may work for one employee may not work for another employee, but if you have given each the opportunity to share feedback on how they're working, you find that one way works well for one employee and the other one and an example, one employee does better work when they work from home 3 days a week. The other employee wants to be in the office every day. You're not escaping the rules if they are both performing at an optimal level, right? So the I want to say it again, the handbook is a great tool. It's great for it to give to employees to set expectations. You don't have to have one, and it is also not an escape from having real conversations with your employees. But
Okay.
it is a tool.
So we've got a lot of the W-2,
Hmm.
Mhm.
and now talk a little bit around the 1099.
Yes.
Yes.
And the one that what we see a lot is um people like, no, I want to no, you just pay me as a 1099. I
Yes.
always want to
Mhm.
just pay me as a 1099,
Yes.
because they want all the money now. That's
Yes.
Right.
all they're thinking about, is wanting
Yes.
all the
Mm.
money now.
Yes.
But
I'm
when
not
is
the
that really appropriate?
Yes. This always reminds me of Busta Rhymes' song, Put Your Hands Where My Eyes Can See. That always makes me think of that, right? I want my money up
Right.
front. That doesn't make you
Hmm.
a 1099. You would bring in a contractor when you
Which is a
have,
1099. So just to
which is a
just to
1099.
clarify
So
that, because you're going to
1099, let me
say.
explain the 1099. 1099 is also slang for, just like the W-2 for employees. That's the form that you get at the end of the year. The same company owes 1099s a form, that 1099 form at the end of the year for all of the dollars that they were paid as they worked for that company. They do not pay taxes on the behalf of the 1099. And there are a lot of things that you should not pay 1099 because they're not employees. We've seen this a lot. You don't pay 1099 sign on and bonuses, okay? Performance bonuses. We worked for a
Mm-hmm.
company that loved to give contractors bonuses, and we shuddered every single time. Um, in addition to that, you cannot treat 1099s, and you want to be very, very careful about not treating your 1099s as employees. They don't need to be on the all hands meeting because they're not an employee. They do you,
Mm-hmm.
and there's a lot of times there are, when if you have tools that they need to use for the particular business. And I want to go back to when the ideal situation or why you would bring a 1099 in. But if they need tools to work as part of their onboarding, it needs to be very separate from how you administer tools, laptops, software licenses from the W-2 employees. That should be two separate processes. And it should
And
be handled.
typically, I think the cleanest thing to do is 1099s have to bring their own stuff.
Yeah.
That is true, but sometimes there are organizations that do, if they're working, particularly for the audit firms. I've seen that when auditory
If it's
roles,
proprietary
yes, they have
stuff.
proprietary information. They only want you operating on their they only want you working on their platform, in their their group chat, in their software. They want all of the moves so that they can do an audit, right? If there's anything that
Mm-hmm.
goes on, they want to be able to have all of that information. So I have seen that, where they get a specific laptop to work for that client on, and you're only to do that client's business on that machinery. The reason you would
Hmm.
bring in a 1099 contractor is there's a number of them, right? And it's usually tied to the skill set that they are offering. You need somebody who specifically knows how to do X. And if you and for a specific period of time, if you're bringing them in for a contract, we have this contract that is from 6 to 12 months. We need somebody who can dedicate all of their hours to that particular client, and we can't pull anybody off of our team to work in that way, right? That's a great time for you to bring in a contractor because they can manage that client's work. Let me be careful how I say that. Manage the work for that client as it relates to that project. And then on the
Mm-hmm.
financial side, you have different decisions to make, right? Because you have to align when you onboard them with when the funds come in for the project. You are paying them out of that project budget, the income. So
Mm-hmm.
when that project income is over, when that project is over, unless you have another project to that their skill set matches to onboard them to, then that contract would be over. You need to have contracts in place. Please stop bringing in contractors just in name, and all they have to do
Mm-hmm.
is provide their pay information. You should have a service agreement. A lot of times you should have an NDA in place so that they are, there's two things you want to protect with a contractor. Same with your employees, actually, if you're working with proprietary information. You want to make sure that as they're working for you, they're not taking your information with them to another client, to a competing client, and they're not soliciting opportunities for themselves with that client while they're working on your project. So
Yep.
when
Or
you're
with
talking
your
about
vendors or
bringing in,
your client.
yes, yes, or their clients, right? And in
Hmm.
it gets tricky in certain industries because there's a small unit, right?
Hmm.
It is, they're all working with the same people, so they have relationships from other projects that they're bringing to you, and or to your and in a lot of cases that those relationships can help because they can, that relational capital is valuable for you because they can get into some spaces that benefit your business that they otherwise might not have been able to. But also there's a risk because you want to make sure, again, they're not sharing, well, let me tell you what they do so that you can get the inside scoop, right? So you want to make sure that before you bring in a contractor, your reasons are ironclad and your documentation is ironclad to protect your business. It takes a little bit longer, but you have got to do it. And I wish I could say that the majority of my business comes from the front end, where companies want to set up their people practices, and I really do, because I've actually in two cases I can think of, I told the potential client they weren't ready. And the
Mm-hmm.
reason, they wanted to, and here's another scenario. You have people who've been working as contractors for so long, you feel like you owe them to become employees. And if you
Mm-hmm.
have contractors that are working for you for so long continuously, that probably means the setup is not right. But if your business is a
Mm-hmm.
project based business, events, if you do a lot of marketing companies can operate this way, branding companies, it's perfectly normal for you to have consultants that you've worked with on multiple projects. But you want to check your paperwork, and you want to make sure that as you're working on on these businesses, that you are, each project rather, that you're documenting when does one project end and when does the next project begin, and what is the service agreement for that particular project. If you have them on a long project, a 3-year project, you need to be very sure it is linked to a project that is 3 years long.
Mm-hmm.
Yeah. Very, 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 very clear on your documentation. So I think we fully defined the difference between a W-2 and a 1099. I want to get into the good stuff.
Yeah.
What are some of the risks of getting it wrong?
Yes.
Right. I was just thinking, I want to throw out a couple phrases and you tell me what's
Okay.
wrong with it.
Hmm.
Okay.
My
Let's
first
hear
one
it.
is, but Anika, we're a family. And I like to create a family environment with everyone who's working with me. So, if they want to be a 1099 or W-2, I mean,
Yeah.
it's a family.
Hmm. Let me tell you, if you have somebody who asks you to come work and they tell you we're a family, run. Okay, run. And the reason you
Why?
run,
Why?
because you
What's
wouldn't
the what's the
hire, if
problem?
it was a family, you would have hired your family. Okay, you wouldn't be talking to me. But the other part of that is, this is business. The minute you lose sight of this is business and you start operating in areas of, we're a family, so it's okay that you do this extra work that I'm not paying you for. And I remember, this is a phrase
Mm-hmm.
that lives in my history. You cannot expect people to value what they did not ask you for. And the reason is, if
Mm,
you continue to do work that they're not paying you for, right? Lending, we're a family. You need to be a business partner first, because ideally, if we were family, you would treat me better than you would a stranger. And so you would want me to have that paperwork out that outlines the work that I'm doing, the hours that align with that payment, right? Because you're paying me, and that's a big misconception, particularly for contractors who work on a retainer. You need to specify what hours that entitles the business owner to. Because I have seen business
Mm-hmm.
owners feel like they are entitled to your time at any time because they're paying you a retainer. If that's the deal that you've worked out, fine. But if it's not, you need to be very specific about the hours that you're working, and what is the job that I am coming to do for you, is what should be outlined in your
mm-hmm.
service agreement. And if you operate like family, and in addition to that, great. But let me also say, be leery of, again, you're not supposed to be treating your contractors like employees. So, you want to have the cookouts, we want to go out to lunch and all of those things. It's a slippery slope. It's a very slippery slope. I'm not saying that contractors cannot be included in any of those things, but you want to be clear about what the expectations are so that you're not blurring the lines. So
And
that's one.
let me get like here's another phrase for you. Um, yeah, I hear you, Anika, but I really don't want to write anything down, like, because I don't want to be locked in
I don't want to be
to,
locked in.
anything with any, because I
Hmm.
want to have some flexibility, and
Hmm.
I think I'll get sued if I start locking things down. What do you think of
Yes.
that?
If you have commitment issues with the people that are you expect to do work for you, then you don't need to be in business, right? Because you want somebody who is committed to delivering for your business, because that's going to convert into customer satisfaction. You need somebody who believes in the commitment that they're making and believes in the consistency and the quality of their work. Writing it down also keeps you out of trouble later on when that person who is your homie and you don't want to write it down, when they go to the unemployment office and they file an unemployment claim because they felt like they were employees, you don't have anything in that is documented that says, no, it was clear to both of us that this was a contractor relationship. You have to
Because
have it
everybody magically forgets. They magically forget anything that you all have
Yes.
talked about previously
Yes.
that doesn't
Mhm.
fit whatever perspective they have.
Yes. And let me
Everybody
say this,
magically forget.
they forget, but let me say this to the business owners. Contractors can get unemployment if you do not properly document and communicate with them throughout the time they're there. But more than that, they get unemployment, but the unemployment office, and this is a scary story. Kina and I have worked
Yeah,
together on
tell
a
the
number of
scary
companies,
story.
and we were working on an audit for a contractor that lived in California. California is not, if you have employees that live in California, you need professionals to help you navigate that. So California did pay this contractor unemployment, but then we had to go through an audit to find out not only why would they think they're an employee, when they found out that, oh, not only did this contractor have a right to feel like they were employee, they asked us and audited us on all of the contractors that company had done business with in California. They owed back taxes. They owed penalties for being late. The unemployment that hit their account for that employee. So we spent hours that the client had to pay for. So you're not even paying me for the work that I came in to do. You're paying me to sit on audits, to sit, collect documents, to do the work associated with that. In addition to that, the adjuster from California knew me so well that when another one of my clients had the same situation happen, she just passed my name on to that adjuster who already knew my name in the office. That's not how I want to. That's not where I want to.
That is
I don't want to
notoriety.
be famous that way.
You
But
don't want to be notorious,
I
right?
don't. No, right. But here's the thing: when I came into both organizations, both of them, I was very explicit about the penalties and the potential harm to their organization if they continue to handle things this way. And a lot of times, I've had business owners say to me, which is crazy to me, but I've had them say it, that they're willing to take that chance. I am not. I am not. And so I will, I'm not. I'm willing to part ways, because that means that you don't the work that I'm coming in to do to build strong structures that, bring in top talent, that builds additional leaders, that helps your organization to thrive, doesn't exist. And I'm willing to take unnecessary risk.
Yeah.
Right.
And the bottom line is, that's the bottom line, because I know we have to bring it to a close, is you got to decide if you're really are running your business as a true business.
Yes.
There is discipline that is required.
Yes.
There are rules that are required.
Yes.
There are things that you need to do and how you manage people, whether you like it or not. So get over yourself.
Yeah.
Okay, bossy.
Yeah.
Because it's like, otherwise,
Right.
here you are paying penalties. You're paying for a finance person for hours. You're paying for an HR exec for hours. You're paying all this interest, unemployment. You're paying all this stuff simply because you failed to listen and run your business effectively from the beginning. Bottom line, it's 100% your fault that you didn't listen. I just had to get it out. Right.
Yeah, because I'm like, what? I feel like I did something wrong. Bottom line,
Right.
you failed
Period.
to
You failed to
listen.
listen. That's really what it is.
Do
It's
what I told you to do.
Because
what I
you
told you to do.
didn't do what I told you.
Yeah.
Because what Anika told you to do. I was just there saying, do what Anika says do.
Right.
Right. And it's
Yeah.
just,
Even
and,
if
it,
she's
and
a
it's
pain
not
in the
one,
butt.
it's not
Don't
two, it's
forget
not
that part.
three. It's like
Yeah.
over and over
Yes.
and over again. It's
And I
not like
think
just one, it's not just one client. It literally is over and over and
yeah.
over
And
again.
it would be different if the thing that I think they believe is that there's so much going on. Certainly they're not going to zero in on little old me. They love little old you.
Right.
Because little old you is what
Right.
sustains their charging, and it does not go
That's where
away.
they make the
That's
most
where
of
they
their
make the most
money is
money. Their
little old.
fines. Yeah.
Right.
These
Because
auditors.
they know that they
Yep.
know the smaller business
Yeah.
they don't have the documentation or the governance
Yeah.
that the major corporations
Yep.
have.
Well, even
So
bigger
that's
than
why they
that.
zero in.
They know that you're willing, you're coming in, you're making your money, right? You feel like and they love the audacious business owner. Love them. Because the reality is the number of audits, what they give grace to the business owners who just didn't know, and they show that we didn't know, we weren't doing it the right way, but here's all of what we're doing now so that we're not in that situation. And we work with some who came back and said, now that you have that in place, here are the we're going to deduct from the original
Yeah,
fine.
they'll do some
Because
deductions then.
yes, they will deduct. So but the least expensive way for you to handle it is to set it up correctly from the beginning. And if you're not sure, spend the money. It doesn't have to be with me. It could be with me, but it doesn't have to be with me. Someone who knows how to help you set up your business. That's both financial first and with your people. Those are the two areas that if you want to scale will hold you back if you don't have them set up properly. Pay the money that it takes to have someone, even if it's just to have them come in and help set you up. Do that, because otherwise the chances that you're taking down the road, not only they're not worth it, they sabotage employee and contractor confidence. They become a part of your business reputation, your inability to pay people because you've got these fines that they don't care about your cash flow. When that fine is due, it's due. They can garnish,
Sure
they
is.
can put a lien on your business account, and they will.
Mm-hmm.
And it doesn't make sense to go through that when the reality is if you just do a little front work, put things in order, you can have an amazing people operations that actually becomes the lifeline of your organization.
And I have said this, and I've said this with clients on the phone, with Anika on the call, and I say HR is a pain in the butt.
She does say that.
It is. It is
Yeah.
a pain in the butt,
Yeah.
and she's going to tell you got to do this, you got to do that. You
Mhm.
roll your eyes, but you
Mhm.
know what? You pull up your
You
whatevers you wear, and you just do it.
Just do it.
And
Mhm.
and then you'll be okay. Now, it is a pain. You don't want to do it, but I guarantee you, it's a whole lot less energy to do with that to get everything set up properly than the energy is going to take on the back end. And
Yep.
when you see your bank account and
Yes.
what
Mhm.
happens to it,
Yeah.
those two things, we have seen it be the reason, a part of the reason why people have gone bankrupt and
Yes.
lost their business
Yeah.
was totally because they did not handle this properly between W-2 and 1099.
But let me be clear. The first part
Period.
of why
And,
they
and setting up
filed it.
everything around it.
Yeah. They didn't listen is the first reason. They do not listen. They did not listen. Yeah.
Yeah.
So
And so
yeah.
they've paid out, in some who are still in business, but they paid out millions. I mean, not like little, like not like chump change. Some have paid out a lot, whether it was the employee getting a lawyer, an attorney, and filing suit, or the
Yep.
contractor filing suit. So,
Yep.
because not only can they go to the state, but
Yes.
then they can also file suit
Civil
against you,
suits.
right?
Yeah. And they can, yeah. I mean, the EEOC will say you don't, that in some cases the least of your worry, because if they file a civil suit, it's the cost of managing the suit that the company can't afford. You can't afford an attorney. And let me give this is a little tidbit for business owners. Attorneys love discrimination suits because their strategy is to settle. And they take the client on a contingency basis. So your employees have all day to sit in that lawsuit because they know they're going to be paid. You are going to pay out something once you get into that cycle. And even if it's just to attorneys to help you manage that cycle, that's not where you want to spend your money. It is, you might feel like a jerk. I've had plenty feel like I feel like a jerk when they're, so stringent on feedback, and I'm a great coach on having hard conversations. You have to have them. You have to Kina's point, you have to. It's so much better on the front end. You can get better at having hard conversations. I don't know that anyone gets better at paying out fines.
Right. Paying out fines, lawsuits. And we're talking, just to give people, ballpark numbers, like to defend yourself in a lawsuit, we're talking 20,
50 grand.
$30,000?
Yeah.
50,
Yes. I would
50,000?
say 50.
Yeah, to
by the
defend
time.
yourself in a lawsuit.
Yeah. If you want to go all the way
Yeah,
to the
so
end.
it's like, so when you think that,
Well,
if you go all the way to the end.
Yeah.
But even like, if you go all the way to the end, what we're so if it's like $50,000,
50 plus.
$50,000 for a small business,
There's a lot of money.
that you could have completely avoided if you had did your paperwork and had properly
You
done
could have
feedback.
hired a little HR generalist. You could have just hired a little part-time. And that's a salary that you could have paid to somebody to help you make sure that when you hire somebody, two things, right? You hire the employee and have them work through that process, or you onboard your 1099s and make sure those processes are concrete and streamlined, and that everyone follows them, consistent and in order. That is where you really would, even if you have to do it yourself. So I'm going to be quiet because.
So Kimberly, wrap us up. I know we get really passionate on this. I can see your face.
Kimberly is like,
oh my gosh, people watch the podcast video for this one.
Yes.
Kimberly, can you wrap it up? Because
can I get a word in edgewise? I'm like,
you can just
go sit over here and
Kimberly,
just
listen. What did you hear? What did you hear from this?
I hear, first of all, from the beginning, get your planning, your documentation in order. Know that even if it's just you want to bring in someone to consult, before you start dealing with people issues, know what you need to do. Second, even if you bring in a consultant, listen. I know there are some people that will hire somebody and they don't want to listen. They're not coachable.
Which is bizarre.
Listen to what listen to what your subject matter experts are telling you, because if you knew it, you wouldn't need a consultant for it. And third, have the hard conversations, because you can perfect those conversations, but if you don't, you're going to have to pay. And I don't know about you. I only want to pay for what I plan to pay for. I don't want any of these surprise payments coming out because I didn't listen, because I didn't hire anybody, because I thought I knew everything. So I think that's a good wrap up. Know what you're doing before you even start to bring in people. Know the rules. And if you don't know the rules, bring in someone that can help you, and then listen to that someone. Because you're either going to pay on the front end, pay on the back end. And when you pay on the back end, it's always more than what you would have paid on the front end.
That's right. That's right. Bottom line.
No sympathy. You get no sympathy. Lack of sympathy.
There's no tears shedded. There's no tears shedded. So this has been an amazing topic for sure. This is not the only time Anika is going to be with us. We want to make sure that our business owners really understand these processes. We have good sense at YBP. We know our lane. And so that's why we partner with folks like Anika Bowles and Bowles Consulting, because we say the minute a client says, we're like, whoa. Let me call somebody for you.
Mm-hmm.
right? And so that's what you want. That's what you want to work with, people who are those subject matter experts. So I know we normally do a shooting the topic, but I don't know, we used all our time because it was so this was so important for people to understand, to take a moment with, to sit with. So share us comments, share questions that you may have on whichever platform that you are either listening or viewing. And we would love to get that feedback and then be able to come back and have Anika back. And so we can get the answers out to you all, because it can be confusing. It can be
Yes.
confusing when you're thinking about employees and contractors and the rules and, oh, is this okay? Is that not okay? We're here to help you, and we want your business to grow. So
And you
Absolutely.
thank
can
you so much.
always email us. You can always email us at balanceyourbookspodcast@gmail.com.
Thank you. Well, Anika, thank you for joining us today.
Absolutely.
Thank you. It's always good to see you, Anika.
The
And this has been
same.
another episode of Balance Your Books podcast. We will see you next time. Have a
Next
good one.
time. That's a wrap for today's episode of Balance Your Books. We hope today's conversation helped you gain a little more financial clarity and cash flow confidence.
If you enjoyed this episode, be sure to subscribe, rate, and review us on Spotify and Apple Podcasts. And don't forget to follow our YouTube channel, Balance Your Books. For more resources and episodes, visit balanceyourbookspodcast.com.
And if you're ready for strategic financial guidance to help you understand your numbers and protect your dream, connect with the team at yourbalancedpartners.com.
Until next time, remember, understand your numbers, protect your dreams.